What's the one thing investors love? Flexibility. And that's exactly what Flexi Cap Mutual Funds offer, the freedom to invest across large cap, mid cap, and small cap stocks. No wonder they have become one of the most popular equity fund categories. In fact, they attracted a massive 14,996 crores in inflows in the last quarter of 2024, second only to sectoral funds as per AMFI data. Among these FlexiCap funds, Kotak FlexiCap stands out as the third largest in the category after Parag Parikh FlexiCap Fund and HDFC FlexiCap, managing a massive 45,433 crores in assets. But size alone does not tell the whole story. Does this fund stand out in terms of performance and strategy? Hello and welcome to our channel 5-Minute Finance by ET Money, where we discuss the basics of investing and personal finance. In this video, we'll break down how Kotak FlexiCap Fund manages risks, delivers returns, and whether it's the right fit for your portfolio or should you stay away. The recent stock market correction has hurt every mutual fund category. While markets have shown signs of recovery since the early March, damage remains. If we talk about the FlexiCap Funds category, the category on an average is still down by 7% year to date. And the last one-year returns as on 31st March stood at 9.58%. So while strong returns are the ultimate goal, protection from downside, in other words, falling less in tough markets, is crucial as well. Let's do a little math here. Your stock has to jump by 33% to recover to its original price. Likewise, if it falls by 75%, the stock needs to gain 300% to recover, and so on. So let's begin with the most important point here. How well has Kotak FlexiCap Fund navigated market downturns? Over 13 market corrections in the last decade, the fund has outperformed the Nifty 500 11 times, consistently offering better downside protection. It showed resilience during major downturns such as March 2020 COVID-19 crash, the June 2022 correction, and September 2019 slowdown. It underperformed only twice, and even then by a small margin, like in December 2021. A key factor is experienced fund management. Launched in September 2009, the fund has 16 years of history. Since August 2012, Harsha Upadhyay has been at the helm, bringing consistency in strategy. While past performance does not guarantee future results, Kotak FlexiCap Fund has repeatedly navigated volatility better than the broader index. We have seen that Kotak FlexiCap Fund tends to fall less than the market during downturns. While it protects during downturns, does this impact its long-term returns? Let's compare. So over a 10-year period, Kotak FlexiCap has slightly outperformed the Nifty 500 with a return of 14.18% vis-a-vis 13.12%. Over 7 years, its performance is almost identical to the index, 14.87% vis-a-vis 14.76%. But in the last 5 years, it has lagged behind, delivering 25.57% compared to the index's 27.35%. But trailing returns show point-to-point returns. They don't tell us about whether the fund performed consistently over time or not. That's where rolling returns help. Rolling returns are like calculating trailing returns, assuming you are investing on a daily basis. You can say it is like a daily SIP for a certain interval, and then you take an average of the series of returns. To know more about rolling returns, refer to our other video. The link is in description. Now look at your screen. Over the last decade, no matter which 7-year period you pick, Kotak FlexiCap Fund has delivered consistently. Its 14.61% average return is slightly ahead of the Nifty 500's 14.35%, though just behind the category average of 14.68%. This tells us one thing. The fund has been a consistent performer, keeping pace with the broader market and its peers but not significantly outperforming them. While some funds take on more risk for higher returns, Kotak FlexiCap has leaned towards stability and downside protection, making it a reliable choice for long-term investors who prefer steady compounding over aggressive growth. So what has driven these strong long-term returns? Let's zoom in to understand the fund's proven investment strategy. FlexiCap funds have the flexibility to invest across large cap, mid cap, and small cap stocks, giving them a dynamic approach to equity investing. But Kotak FlexiCap Fund has carved out its own strategy. On your screen is how the fund has changed its asset allocation over the years. Kotak FlexiCap Fund has consistently held a higher large cap allocation than its category peers, with nearly 69.47% exposure as of February 2025. While it's consistently favored large caps, it recently upped small cap exposure. Its mid-cap allocation has also been steadily higher than the category average, 23.46% versus 17.78%, showing a preference for mid-sized growth companies. What stands out is the shift in small cap exposure from just 1.32% in 2021 to 4.42% in 2025, compared to the category average of 16.61%. So while still lower than the category average, this increase suggests a measured approach to capturing small cap opportunities without significantly increasing risk. These shifts show that the fund is balancing stability with some exposure to mid and small cap stocks to boost growth. To understand the investment style better, let's see how the fund's top holdings have changed over the years. A fund's top holdings reveals its strategy, where it is investing, how actively it is managed, and how it balances risk. Looking at Kotak FlexiCap Fund over the years, one thing is clear. Stability remains a priority with selective shifts in focus. ICICI Bank has remained the top holding for 5 years, but its weightage has slightly reduced from 9.46% in 2023 to 7.02% in 2025. Meanwhile, Bharat Electronics BEL has climbed into the top 5 holdings, now at 5.26%, a sign of funds' increasing focus on industrials and defense. Another notable shift is the reduction in reliance on Infosys, which was once a top 3 holding but has now moved lower in the list. In contrast, Ultratech Cement and Larsen & Toubro have gained prominence, pointing to a growing tilt towards infrastructure and capital goods. Another change is diversification. The fund now holds 56 stocks, spreading risk across a broader set of companies rather than concentrating on a few. These shifts indicate that while the fund retains core positions in financials and IT, it is gradually expanding into sectors like defense and infrastructure, aligning with broader market trends and economic policies. Kotak FlexiCap Fund has strong downside protection, consistent long-term performance, and a conservative small-cap approach. It is ideal for investors seeking stability over aggressive growth. The whole idea of this video was to give you enough information to get to know the Kotak FlexiCap Fund better and decide for yourself if this fund is suitable for you or not. Don't treat it as a recommendation. Drop any questions in the comment section, and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.